Carol Fay here, putting the EXP in expert. Today, I want to talk to you about all the kinds of insurance that you're going to have to make decisions about as you buy your house. Let's get into it. Okay, so let's talk insurance. There are 6 types of insurance that you are going to have to consider as you go through the home buying process. And so, first and foremost, congratulations. You've decided to buy a house and you're doing your research, or you're in the thick of it and you came across this video. So, let's start talking about it. You have, and I have a little list here because I don't want to forget nothing. You have homeowners insurance, flood insurance, title insurance, a home warranty, which isn't an insurance but can be marketed as such. You have PMI, which is private mortgage insurance, and then mortgage insurance. Let's start at the top of that list. Okay, so let's start with homeowners insurance. This is, a commonly used term. You might be pretty familiar with it. If you are, go ahead and fast forward. But if you're not, here's what homeowners insurance is. It is an insurance that is required by the lender if you are financing that will protect the home in the event of a catastrophe. What do I mean by that? Let's say there's a house fire and there's thousands upon thousands of dollars in damage. The homeowner's insurance at that point will kick in, provided that it was not arson of some sort or something illegal, and they're going to help pay to get that repaired. Now, with homeowner's insurance, you are going to have a deductible. Just like car insurance, you're going to have a deductible, and you do have the option of picking different deductibles. You are going to want to check with your lender and see if they have a deductible requirement. What I mean by that is some lenders, even though an insurance company will offer a $2,500 deductible, the lender might not feel comfortable with your deductible being that high. Maybe your mortgage payment is $1,500 a month, and maybe they feel like after reviewing your budget based on the guidelines of the law that $1,000 deductible is just a little too much. And so they might require you to have $1,000 deductible or a $500 deductible. So you're definitely going to want to talk to them about that. And then when you start talking to insurance agents, you are going to want to make sure that you are covering the proper amount on your home. And so they should be talking to you about replacement value. Again, in the event of a catastrophe, what would it cost to rebuild your home? They should be talking to you about square footage. They should be talking to you about, are there any sheds, any additional structures on the property? Are there fences? Because all of these things you're going to want to have insured in the event of an incident. That way, you're not stuck emptying out your savings account, or even worse, paying for a house that's no longer standing. The other thing that the insurance agent should be talking to you about is the content of your home. How much are those things worth? There are other things that could come up through the course of home ownership that home insurance will cover. Make sure you fully understand your policy. There are a lot of little nuances in there. You're going to want to make sure that you understand completely, because this is your protection. Okay? All right. Now, number 2, flood insurance. Okay. So flood insurance is an insurance that can be required by a lender based on the location of your house. So FEMA, the Federal Emergency Organization, has what they call flood maps. And so these are areas that are more likely to flood in the event of heavy rains or, things of that nature, simply because of their proximity to large bodies of water. You can talk to your realtor as you are looking at properties, okay? I'm in Delaware. Our entire state is below the water line. But there are areas in Delaware that are not in the flood zone, and there are areas in Delaware that are in the flood zone. And so when I'm talking with my clients, I make sure I'm like, hey, have you considered that the property you want to go and see is in a flood zone, and what that would look like in your budget of having to pay for that additional insurance? And so that's a conversation that I have with my clients, because some clients don't realize what that means monetarily. And so it's my job to make sure that as we're going through the process, I am reviewing these things. So you're going to want to make sure, if you are in an area like New Jersey, there's parts of New Jersey that are all flood zones. I'm sure California and Florida. You're going to want to make sure that you're talking with your agent about these things if flood insurance is something that you haven't considered, and make sure that the homes that you are looking at are or are not located in a flood zone. Okay, so the next thing on the list is called title insurance. title insurance is a protection that you can purchase against the deed to your property. All right. So I'm actually going to use the last 2 years as an example. In the last 2 years, our courthouses and filing systems have all been closed. People are working remotely. And so it is possible, it is highly likely, in fact, that if there were somebody trying to file a lien against a property, it is on back order. So it could take them a month to catch up on that. Okay. So let's say you buy a house in the middle of that, and 6 months after you buy the house, something that was filed prior to you buying it that belonged to the previous owner hits against your house. This is where title insurance would come up, because title insurance would kick in the event you tried to sell that property, and they would make that go away. Okay? But you have to understand something. If you purchase a house and you don't purchase title insurance and something hits as a lien against that house after you have purchased it, you become 100% responsible for that debt. So please understand that this, of all the insurances that are available to you, this one to me ranks top on that list of something you need to make sure that you are getting. It's a couple $100, and this is no time to start shortcutting where you're spending money when it comes to these coverages, because in the long run, they absolutely will save you. I had a seller who was selling her property. She had purchased it 10 years prior. We go to settlement, and of course, whenever you are buying or selling a house, there is always a title search done. And this is to ensure this exact thing, because when you are selling your property, you are required to transfer that property with no outstanding debt against it, no liens against it. And the reason that is because there is a hierarchy to your liens. And so as a protection to the lenders who are extending you financing on their property, they have what is called a title search done. And they make sure that there is no outstanding liens against that property. And if one comes up, whoever the current owner is financially responsible to clear that debt. Now, if you have title insurance and it is something that has come up from a previous owner and it is now on there, your title insurance will make it go away. Title insurance will not pay if you have a lien. That is still 100% on you. But it will ensure that nothing from any of the previous owners comes up. Luckily, when my client went to go sell her house and they did a title search and something came up and it was from the previous owner and the attorney had to call me and say, hey, we have a problem, I knew my girl. I called her and I was like, hey, tell me you got title insurance. She would start laughing. She said, you know I did. I was like, excellent. I need information because we need it. Because you have to understand, liens don't expire. They never go away. As long as the house is sitting there, so is that lien. And it won't come up until you go to sell your house and they do that title search. And then they're like, oh, we have a problem because we need a clear title. If you do not have a clear title, you cannot sell the house. They will not transfer it to a new owner. So it has to be taken care of. So if you don't have title insurance, it doesn't matter. You are 100% responsible for that debt, and therefore you are going to have to pay it if you want to sell your house. So yes, again, 10 out of 10, highly recommend, make sure you're getting title insurance. Next on the list, and number 4 is going to be your home warranty. This is something that's available to you to cover the systems within the house. So unfortunately, I have come across clients who thought that their homeowners insurance would cover if the refrigerator stops working or the hot water tank stops working. That's not the case. You are responsible to that. And unfortunately to that, I always say, welcome to home ownership, because you own it. If it breaks, you're responsible to fix it. So that's where a home warranty would kick in. So let's say your hot water tank explodes and does thousands of dollars worth of damage to the house. At that point, your home warranty would pay for the hot water tank, and your homeowner's insurance would pay for the damage that was caused by the breakage. Okay? So these combined could really put you in a position to sleep a little better at night if you're not one for worrying about repairs. When I bought my house, my realtor was pretty good. I wasn't a realtor at the time, and she made sure I got a home warranty. Sure enough, within 6 months of buying my house, my hot water tank broke. I think at the time I had a $100 deductible. It cost me $100. The guy came out. He was super fast. He was like, yep, you need a new hot water tank. My hot water tank was replaced within 3 days, and I paid $100. So I was super happy about that as a new homeowner, because Had my realtor not explained to me that she was going to, make sure I got a home warranty, I would have never known, and I would have been standing there like, oh man, now I got to come up with another $1,000 this month to pay for that hot water tank. So it is definitely a good investment. Again, this is not the time to be taking shortcuts on saving money. However, if you have to shortcut something, you do not have to get the warranty. And again, talk to your realtor. They should have a brochure. They should be able to review with you what it does and doesn't cover, so you can see if it makes sense for you. We have a little visitor. This is Digit. So next up on the list is private mortgage insurance. Okay, private mortgage insurance is required by the lender. Usually when you do an FHA loan or a conventional loan, it doesn't matter. It depends on how much money you have put down on your loan. So with FHA loans, you can go as little as 3.5% down. You're gonna be forced to get PMI on that loan. Same with a conventional. If you do the 3 or the 5% down, you are going to have private mortgage insurance on that loan. And this protects the lender. Years ago, when you bought a house, you had to put down 20%. And so that way, if the lender had to foreclose on your mortgage, they had 20% equity to cover all the fees and everything involved in getting the house sold. Now, because the private mortgage insurance was introduced into the marketplace, it gave homeowners the ability to buy the house if they didn't have 20% down, which was great. That's all what it is. That's fantastic. When I bought my house, I didn't have 20% down. But I got private mortgage insurance, and so my lender was comfortable lending me the money to buy the house. Now, with private mortgage insurance, once you reach 20% equity in the house, you can request your private mortgage insurance be removed from the loan. This is generally going to be included in the payment calculation that your mortgage agent should be providing you. And so you're going to want to make sure that you understand how that payment breaks down. And you can also inquire, I think with FHA loans, there's a different set of rules as to when private mortgage insurance can come off versus a conventional loan. With the conventional loan, I believe it's either 10 years or 20%. However, it stands off of the original appraisal. Okay? So let's say people 5 years ago bought a house and they are paying private mortgage insurance right now. The lender's not required to get an appraisal to have that come off right now, even though everybody has gained value in their house during this market. However, you can contact your lender and start asking those questions. Like, hey, I have a lot of equity in my house right now. What can we do about getting that private mortgage insurance off? They might be open to having that conversation with you. But it's definitely something that if you are putting less than 20% down on your home, you can expect your lender to require you to carry it. Okay, number 6 on the list. Now, this is not going to come up until after you have purchased your home and you are in that house. Then you're going to have people contacting you for mortgage insurance. Okay? And they're going to, to my understanding, I don't remember, it's been a long time, but that gets a little relentless. They are coming out of the woodwork, okay? And what this is it is an insurance to cover you in the event something unfortunate were to happen and you were to pass away. It pays the house in full. So if you and your spouse buy a house and it is purchased on 2 incomes, it is feasible to think, should one of you pass away unexpectedly, there would be a hardship financially in continuing to pay off the house. If that is the case, this is something that you're going to want to consider. It is 100% up to you if you decide to move forward with this or not. But it is something you and your spouse should start talking about now before you close on the house. It's not an easy conversation, even just doing this part of the video. It's not easy. You never want to talk to somebody about their death. But unfortunately, it is a part of life. And one day I will pass away. And so my husband and I had to have that conversation. What does that look like for one of us should the other one be gone? And make and figure out, does that make sense for you? I don't remember it being a lot of money. I do know that most of us have life insurance policies and other things in place. You might not need it, but there is a possibility that you do. And so just have that conversation. Just have the conversation and figure out what is best for you and your family. And so there you have it. Those are the 6 types of insurances that you are going to hear about as you go through the home buying process and then right after you have closed on your new home. I really do hope it helps. I know it's a pretty lengthy video, but I wanted to make sure I gave you a solid explanation of each one of those coverages. My name is Carol Fay. I am the Northeastern Team Lead for Team BC. If you have any need for anything in real estate from myself here in Delaware or any one of my team coast to coast, go ahead and drop me a DM and we can talk about it. If there is a topic that you would like to see me cover, please go ahead and drop it down in the comments. I'll go ahead and get a video up for you and I'll give you the best explanation that I can find. Go ahead and hit that subscribe button down there, and there's a little bell for notifications. Make sure you subscribe to the channel, drop a comment, hit the like button. Let me know that you're watching, and let me know what I can help you with next. I hope that you have a great day and enjoy the rest of your weekend.